You know, I was thinking I wasn't even going to make it in time, but I made it. Good morning, everybody. Storm's been causing my electricity just to keep cutting in and out. So one thing we want to do, or say the first thing we want to do, is take a look at what happened around the world. I'm getting an error, I see. Give me just a second. I'm going to figure out what's up wrong. What is going on there? Well, I guess we'll just go on without it. So I want to start with what happened around the world, and then take a look at what's on the docket for today. I'm really surprised that there's not a lot of central bankers rushing to come out and tell us their side of the story. At least not yet. They're probably very tired and they need a few days of rest. So we did make it through the FOMC and out the other side. Tagged some levels that really weren't too much of a surprise. And a lot of things right now come down to, well, what are we going to do next? Or what do we do now? I would say it's nearly inevitable that we retest this low 36.51. The volume's a little heavy, nothing too extreme. We're sitting at around 200. That is a little heavy. So it's a little heavy, but it's within line. It's within tolerance. I'd still want to know more about what's going on here. There is a lot of red on finance juice. Most of that looks like something I'd have to read a little bit more into to figure out what's going on. Oops. Well, it's a little heavy, still within boundaries. All right, so we are inside day breakout. As usual, there's really only three things we can do. Maintain the range, which we had been doing for the last week. Stay broken out to the downside, or make it all the way back through yesterday, break out of the top. I gotta say, of the three, breaking through the top today is the least likely scenario. I mean, it's possible, but not probable. With yesterday's range being so wide, the chances of us actually making it all the way out through the top is pretty low. So we are still inside day breakout, just barely. Looks like we're trying to get back inside. We're basically flat on the morning. We have an ADR of 2.25. Yeah, the top side's just about done. We don't need that. All right, we got a full ADR at 37.05 and a half of an ADR at half of this range that I just measured. Well, that lined up perfectly. So 50% lines up right on the ADR half. 37.49 and 37.05. And 100% of the range that I measured is 37.32. Now, the thing is, now that everybody's got the answers that they've been looking for, we're going to be watching for an absolute sea change within the marketplace. We don't have anything yet to lean on because the market closed after the FOMC yesterday. But the idea is, but we're going to want to focus on any kind of hedging dynamics that are being taken off on the futures side. We'll just stick with what we got. All right, so we talked about the downside move. If things were to get drastic today, I'm not expecting it to, but if they did, you would want to take 50% more. We don't have an market maker move or anything like that, so there's no expectation at the moment that things are going to get, any really wild or extreme. But we'd be looking at 36.61 as another level down. Otherwise, we have a daily pivot. So far, we have not hit that pivot. So it's a MDP, missed daily pivot. If we get past that floor pivot, we've got last week's low. So we're going to need to get through that level as well. We have our own Globex high, but it's close enough to the floor pivot that I would just lean on that. The floor pivot and the ADR half are overlapping each other, and it's really close together with the Globex high. So a lot of pivot points all just wrapped up really tight right there. And it's where price responded yesterday in that first leg down, that first reactionary spike in volume. So previous week's low, full ADR 38.82. The cash open of yesterday 38.93, and then all of yesterday 39.25. Now we can measure that ADR here too and plot it up, but I'm pretty sure it's just going to put us at the high of yesterday. Yep. So an extreme move to the upside today would still only likely get us back to the high of yesterday. But an extreme move to the downside today, and you're looking at possibly seeing something like 36.60 if things get a little out of control. They're not expected to get that bad, but yeah, but so right now everything is focused on that June low and the August high. That is your controlling situation. And I've had people already talking about, well, I don't know what to do now. Are we still bullish at all? Has that July run into August, is that done? And yeah, that's totally done. That was nothing more than a very strong bear market rally. So if we are going to see another bear market rally, it would have nothing to do with that previous run. And I get it. Some real smart people said that this was our low. The bottom was in. We were done. We were headed out. So I get it. Sucks. And so far, they're still right. It's still holding. It's still our low at the moment. It's unlikely we're going to make it down there this week or today, but we could certainly make it down there this week. That June low is 4.3% away from where we closed yesterday. You figure if we take half of it today and then half of it tomorrow, It's 2% moves a day. We've been moving 2% a day. That's right on schedule. I'm still kind of looking for some chop, at least until earnings really kicks off. Couldn't even log into this thing yesterday. The traffic was so bad here on this site that it was just like, yeah, it was down, right? So we have 3 in white. The gray ones are kind of unconfirmed. You know, they're a wink and a nod. We kind of know where they're going to be, but it's not yet set in stone. But the white labels, they're the ones that are guaranteed date wise. So we got November 2, December 14, and then February 1. Start with the November 2. Right now we're sitting at 3%. The question is, are we going to get a 50 basis points, which takes us to 3.5, or are we going to get 75 basis points, which takes us to 3.75, right? Just pick a number. That way you're not splitting the difference, and make it easy on yourself. Now, a single bar by itself doesn't give us context. How big was this bar yesterday? How big was the bar last week? So if we come down into the bottom and you look at yesterday, and then you look at today, where was the difference, the changes? Yeah, it's not that bad this morning. But looking at where they were last week, so they unwound 100 basis points out of here in a week, 14%. Then they had to allocate that 14% somewhere. 12% of it went right here, and the rest of it went over here, 2%. So right now the market is pricing in a 75 basis point rate hike for November 2nd. If they start to hear or believe that it's going to be anything less than that, we'll start to rally up a little bit, start to buoy back to the upside, because the market is fully pricing in 75 at the moment. Assuming we have 3.75 when we get to the December 14s, what's the next rate hike? Well, from 3.75 to 4.25, or excuse me, to 4.0, be a 25 basis point rate hike. So this is a 25, this is a 50, and this is a 75, based on where we would be after the November meeting is done. So you would first have this, and then this. So right now they're pricing in a 50 for December. What we're going through here, the reason we're over here looking, is now that the FOMC is done, through the day today, you want to continue to kind of circle back and look at this and look forward on where we think the market's going to be. Any sort of rally, any sort of, coming up off of these lows and retesting those August levels are going to have to come, because there's some belief that the Fed isn't going to hit us as hard as they said they were going to hit us. And that could come in the form of, home sales, job numbers, Fed speakers themselves. If we do move to the upside, I reckon it's going to take a few days to wipe out yesterday's levels. All right, so we got a 10-day, 30-minute chart here. It's volume profile and TPO. We are inside the box, and we are underneath the volume point of control. we're in a super crazy shallow area. We should be able to move right back up to that point of control with ease. Getting through it, however, would be a bit of a challenge. But if we can get through that 3,900 area, then it starts to really lighten up, gets kind of shallow until we get around 3,960. So the good thing is getting up to that point of control would be relatively without resistance. It's just dealing with anything once we got to 3,900. Which I do believe 3,900 flat has been added as a cog line. So now we have 3,900, 3,911, and 3,931. That 39 series is starting to really load up with cog lines. So that's COG, center of gravity. What you want to do is just mark the COG on your chart and just leave it there whenever you're looking at the ES. Looking at the TPO, we're pretty much in sync with the volume profile. Nothing really stands out at the moment. All right, we now have an untouched point of control from yesterday. That one is gone. We don't need it anymore. So we'll just steal it and put it over here. All right, the volume profile here isn't offering us a whole lot. Most of it is formed around that same place in time where we spent days, and then that last little trailing bit to the downside. So not a lot of help there. You could carry forward, say, the value area high, but since we're unlikely to actually make it that far today anyways, I don't see a point in it. We've already went through the value area low a few times, so that's got no validity either. So as we talk about often, want to keep track of how far away from that moving average, distance from the 10, especially on a day like yesterday where we moved pretty far. Did we outrun the 10 week? Nope. How about the 10 day? No, I mean, we didn't outrun it. We got, that 3% bar. And 4 seems to be when we really start pushing the envelope, pushing the edge. So when we put this into context with that June low, it's about 4% away. We know, it would take something pretty significant to get us back down to that level this week. And we're getting really close to having outrun or run as far as we could from that 10 day without needing to pause and kind of consolidate and let the market catch up. It wouldn't surprise me if we kind of grind lower to that June low. That would give the 10 period time to catch up. and it would kind of reset this value. All right, well, let's go crunch some numbers. This move in the Dixie last night, keep coming back to this. That was a significant move to the downside. And we got a little bit of loving reciprocation in the rest of the market from it, but not very much. Not even nearly as much as you would have expected. Right? We had the same push here in the S&P. I haven't had a chance this morning to go figure out what's up with the dollar. See what this move was. But it got pretty elevated yesterday. Obviously, a lot of that was unwound last night. If we continue to see the dollar moving to the downside, we're likely to see that reciprocation with the S&P and the NASDAQ continuing to move to the upside. The benchmark right now, I believe, is somewhere around 107, and we're a long ways from 107. You could kind of focus on, say, breaking below yesterday's low, or even just getting below 110. If we get below 110, we're very likely going to see the S&P and the NASDAQ re-challenge yesterday's highs. But it would have to be firmly closing below the 10, right? It can't just come down and like wick the 10, 110. Got nothing out of crude. Interesting enough, whatever was going on in the dollar, it hit the VIX first. All right, so we're asking a question here. How many names in the S&P 100 are up at least 50% this morning? 8 names. It's not bad. It's just really not good. So we're still in this wishy-washy kind of situation. If we ask the same thing, how many names in the S&P are down 0.5%? 5. So again, kind of that middle of the road. It's not bad. It's not good. We're not getting anything. This market needs to make a decision, right? Kind of pick a direction, stick to it, get it done. Take that to the NASDAQ. How many names in the NASDAQ are up 0.5%? 5, down 0.5%, 10. Is not enough here yet to really go on, at least within the S&P and the NASDAQ. Now the sectors, on the other hand, Bitcoin is leading the way, and then energy, transportation, oil and gas exploration, airlines, which I had been mentioning, been seeing the flows in there starting last week. And then small caps, the S&P, cloud services, silver, and then we start getting into nothing. Now, I like to focus on things that are moving at least 0.5%. And at this point, that would be XLE and Bitcoin. On the downside, home construction, which we got a lot of home data yesterday, retail, and natural gas. Now, these are kind of like the old school S&P 11 sectors. They may be broken up a little bit, like into cloud services or whatever, but they don't really represent everything well, which is why we kind of made our own little homemade ETFs, so to speak, right? So this is the crypto names or the crypto space. That there was some news in coin. It escapes me at the moment, but I could have swore, you want to go back and check if you're going to be playing with coin today, that there was some news yesterday. Riot, blockchain global. Now, AMD, NVIDIA, Taiwan Semiconductor, they're in this list, but they're all down this morning. So it's interesting that we could see a little bit of a sympathy play within these names because Bitcoin is doing good, but I wouldn't expect it to be enough to bring these names up, right? Autos, not necessarily EVs per se, but autos took a real kick in the face when Ford came out with that supply chain cost announcement. And of course, this morning now it's flipping the other direction, but not really holding. NIO really took a punishment yesterday. It would stand to reason that we see a little bit of a rebound in there, just like someone on the end of a bungee cord getting bounced back up a little bit before they fall back down again. I would not trust any rally in the autos at all. Tesla seems to be faring pretty good this morning, all things considered. It survived yesterday relatively well. Still holding above that 300 anyways. Give it that credit. I had somebody asking about that Head and Shoulders. Yeah, I mean, I see it. I think everybody sees it, but it's not in the right spot. So Just kind of all right, oil exploration. Every name on the list but one is looking pretty good this morning. Hess is one of the holdouts. So far, that's looking pretty good. Keep in mind, I should have mentioned it earlier. Big candles can be measured, right? So we had a pretty good sized day yesterday. I mean, it wasn't the biggest ones we've had in the last 2 months, but it was a pretty good sized day. And a lot of these names you're going to be looking at, or that we're kind of looking through this morning, they have that really big bar. And whether we go up or down, we're very likely going to retrace some of that bar. And 50% is very often the amount that gets retraced. So it's certainly worth knowing where that 50% mark is. XOP is one of those names on the list that's moving around this morning. It's up to 133. We kind of split the difference and say 133.5. So it's not quite up 50% of this candle yet, but it's certainly working its way in that direction. I'm not seeing it. Right, so things like Marathon Oil here, getting that pre-market rally to the upside. Still want to focus on 50% of that candle, right? And if it gets past that, then you can start thinking about, what else do we have? So it's kind of a split right now in the marketplace between the sectors, and sector groups that normally wouldn't hang out together are hanging out together. It's real muddy out there. We want some clear guidance. One of the ways that you're going to get that is after the market opens, start looking at the correlated coefficient. Right, so come in here, go to your market watch, go to visualize, change the heat map to an index, pick your index. It doesn't matter, S&P 100, NASDAQ 100. Start looking around and figure out what's going on out there. Data-wise, which names are starting to come up off of those lows. It pretty much just shook the tree yesterday and everything got rattled. Now we need to see the follow through. And unfortunately, in the pre-market this morning, I mean, the diversity of names leaves us kind of scattered, right? We don't have really good guidance this morning on direction. And it's not too early now. I mean, it's after 8 at this point. The flows that I've been seeing come in lately are in the airlines and casinos. There's still a lot of short covering rallies going on. Like anything China related, I would be very, very cautious of, especially with what the news was yesterday with China and Russia, kind of holding pinkies and being all buddy buddy. If we start sanctioning China again, you start getting any China delistings, sanctions, anything like that. KWeb took a big punch yesterday, right? It's like Chinese internet stocks. And so, of course, that ties into things like NEO, the EV market, the EV space. So airlines catching a little bit of a bid. They've been seeing the flows come through. Casinos, same. Avoid the China names. And we've still got the short cover and rallies going on. And then other than that, I would say let this thing give us a clear sector or a clear name to lean on, and then trade that. Because at this point, the market still doesn't seem to know what it wants to do with the news that we got yesterday. Want some follow through this morning. So I mean, like, we got nothing out there. The FANG names are even split apart. Meta's up, near half. Tesla's up more than 0.5%. But yet Microsoft, Google, Apple, Amazon, Nvidia, right? The rest of the FANG names, they're just a mixed bag of goods. Let this thing give us some clear direction, and we'll have forward guidance to go off of from there. Everybody be careful, be safe. I will see y'all tomorrow.